I've had a very out of consensus view on macro for 4 years now, actually. I think the economy is just red hot, and the Fed made a massive mistake keeping rates way too low, way too long. And as you know, kind of unwinding mistakes is a lot harder than kind of doing a little bit at the time. If you think back, March 2022, Fed funds were minus 830 basis points, real rates. Fed funds were still zero, and inflation was 8.3%. That's just a massive, massive kind of inflation impulse. And then, of course, the Fed bought $9 trillion of debt and basically dared everybody in America to buy a house. And they did. A record number of people bought houses. Every house in the entire country is up 40% from when they started. And so those are massive inflationary impulses, and they really take a long time to work through. And so I think the Fed, really has no room to cut. And I did notice the first time a newspaper article about maybe starting to tighten. And that was my prediction back in December of 2021. Fed funds were zero and the 10-year note was 1.3. And I said both were going to 5 and staying there for a long time. And that's still my view. I think Fed funds should be 5 or higher, right? And I think rates probably are long rates are probably going up. The 10-year note's only 100 basis points over inflation. That's not really paying you to take that kind of risk. So the big picture on macro is I think the Fed, has to keep tightening or staying tight or tightening.
The issue is with that is because they have to refile the debt, you end up increasing the debt burden all the time.
Yeah.
How do they deal with that? Because, they don't really want to do QE because everyone knows what the game is, which is money printing. How do they deal with the excess supply that comes from just having higher rates without, a lot of the debt increase is just the servicing of the debt itself?
You, my friend, if you knew the answer, you'd be smarter than me. I have no idea how they get out of this. It's really tough.
Today, we're talking about the remarks made by none other than Federal Reserve Chair Jerome Powell. His recent comments have both intrigued and baffled investors, with major figures like Coinbase taking center stage in a brewing financial drama. Cryptocurrencies, once sidelined in the grand symphony of the financial world, are roaring back with newfound vigor. But what exactly did Jerome Powell say that's shaking the market's core? Let's dive in. Welcome back to Investocracy Crypto.
Now spends more on interest than they do on defense, which is a wild place to be. The deficit is 6% of GDP in literally the best of times. Like there's, full employment, everything's great. Like if you have a 6% deficit when everything's as good as it possibly get, what's going to happen when, some kind of rainy day shock happens. So I actually literally don't know. And that's why I'm so bullish blockchain, because it ain't going to be good for paper money is basically the answer. However, I don't know which way the government's going to try and get out of this, but the U.S. went essentially to an adjustable rate mortgage a while ago and financed all the debt at very, very short intervals. It's all coming due, as you say, has to be rolled over. Rates, used to be 1.3 for a 10-year. They should have done a lot of debt issuance at that level. It's 4.3 now, and it could be 5.3 or 6.3 in the next few years. So I really am worried, as an American citizen, like how's our government going to get out of this? Because they have an enormous amount of debt. They're piling on 6% of GDP every year. That's a huge new amount of debt. Rates are heading high. They're much higher than they used to be, heading higher. And most countries, when faced with that, inflate their way out of it. The U.S. hasn't historically done that. There's only 13 countries on Earth that have not defaulted on their debt or had inflation above 20%. The U.S. is one of them. So the U.S. hasn't done it, but they could.
My view is that they do it more slowly using debasement. So that's the liquidity, the printing of money in lots of hidden ways. There's lots of ways throughout the system. And from my measurement, the global central banks and governments combined are increasing the global supply of money or debasing the currency by about 8% a year. So it's a tax you don't see. Most people don't understand it. The price of scarce assets keeps rising because you're lowering the denominator. You know this from emerging market days. Most people don't really understand this mechanism, but that's what happens. So your wages don't go as far and the assets keep going up to make housing unaffordable, and 8% a year. But the flip side of that is without doing that, you end up with a huge crisis, which is even worse. So it's a rock and a hard place, right?
No, I agree with you. And we have seen this movie before in the EM markets that we were in all those years. And inflating your way out by printing more money is really the common way people get out of this. And so I think it's going to happen. And that's why I think you're right that when you talk about the value of scarce assets when priced in paper money terms keeps going up, right? Gold's at a record high, stocks are at record high, real estate's record high, Bitcoin's record high. Maybe they're not moving. It's the price of paper money that's going down, right? And Pantera once did a graph that probably old Twitter feed would have of the price of all those things, price of the U.S. dollar, priced in bushels of corn, a share of the S&P 500, gold, an ounce of gold, and it's pretty much the same graph. It's the price of paper money that's crashing rather than the price of all these things going up relative to each other.
What I've been doing at Global Macro Investor is dividing all assets via global liquidity, which is an index we build. And what you find is the S&P 500 has pretty much gone nowhere. There's a bit of growth driven by the tech stocks. Gold has gone nowhere. Real estate's gone nowhere. None of this has gone anywhere except NASDAQ and crypto, obviously, because they're both technologies that are being adopted and crypto's the big outperformer. So I found that, our hurdle rate for assets is 8% a year for debasement plus, let's say, 3% inflation is 11%, just as a hurdle rate, which people haven't got their heads around yet.
Yeah, and that really is the story for fixed quantity things like Bitcoin or other cryptos, is that if the governments around the world are currently debasing at 8% a year, they're probably going to have to speed up. Why be in something is being debased, right? Why not be in something that has at least kept up with inflation, like a bunch of those things you just mentioned, like gold and S&P? Or, hey, why not get into something? Our Bitcoin fund's 11 years old. It has a 90% compound annual growth rate, right? It almost doubles every year.
The recent press conference by Jerome Powell could have been an ordinary discussion on unchanged interest rates. However, Powell had something else in his mind, a narrative stirring enough to shake the market waters: cryptocurrencies. Coinbase, the crypto exchange giant, initiated legal proceedings that unearthed a series of communications by the Federal Deposit Insurance Corporation, advising banks to be wary of crypto clientele. Powell, however, clarified the stance of the Federal Reserve. They aren't shutting the doors on cryptocurrencies, but are rather welcoming them with open arms and a cautious mind.
They're going to have to take a hard look at Bitcoin as a strategic savings vehicle over U.S. Treasury notes. So that as well could put pressure on rates in the United States as foreign nations decide they need to save in something other than U.S. Treasuries.
So let's talk about that, about the Bitcoin Strategic Reserve. What format do you think it's going to be? Because we saw some noise on the tape today that it might not just be Bitcoin, it might be other US crypto assets, XRP or whatever it may be, Solana. What's your thought on all of this? Or is the US going to be openly buying crypto? Or is it going to be stuff that they've seized and ongoing seizure from criminal stuff? What do you think?
The U.S. does own 1% of all the world's Bitcoins already. We actually participated in the first U.S. Marshal Service auction in 2014 or whenever that was, which was really cool to see the U.S. Marshal Service star on the Bitcoin page, So this is just my own professional hunches, but I think what will happen is the U.S. will do a strategic reserve, but just Bitcoin. The analog would be old school gold, Fort Knox. We have an enormous amount of gold stored as a currency reserve. We don't have palladium or silver or anything else, right? So it's easy to get one very well-known thing that has 60-something% market share through. So if I were a betting man, I would say it's just a Bitcoin strategic reserve, not kind of blockchain generally. And there's actually 3 different ways the president could, or the United States could, acquire new Bitcoins. The first one is the president could decide to direct the U.S. Marshal Service to stop selling the Bitcoins that the U.S. has seized from criminals. That is about $14 billion of crypto. And for comparison, we have 650 billion of old school gold. So, it's a pretty small amount relative to other things. There is a old thing called the Exchange Stabilization Fund, which allows the president, by executive order, to stabilize currencies, and no one's tested whether Bitcoin's like a currency or not a currency in that definition, but it probably is. So the president could do some of that. And then Congress, I think, would have to pass any legislation to buy it like a significant amount, like we really wanted it to do. Sometimes people talk about buying 1 million Bitcoins or whatever. That would take Congress, but there's been a huge swing in Congress too. So it's not unthinkable. Obviously prior to this election, that would have been unthinkable. But from what tallies I've seen, the majority of the people in the House, 270 or so, support crypto, and in the Senate, it's probably a lot less, maybe 20 or 25.
As Powell emphasized, banks have the green light to offer services to crypto enthusiasts, provided they do so in a safe and sound manner. An interesting tidbit is that, according to Powell, banks have already let clients dip their toes in the crypto pool to the tune of $200 billion, even during a market downturn in 2023. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Because I'm starting to think, how far do we move back towards some variation of ICOs, for example? Because it is a great vehicle for capital formation, needs tightening up. Things like the US users can't use perps and other margin products while everybody else can. Where do you see the regulatory landscape shifting over the next year or so?
Yeah, I actually don't spend a ton of time on the regulatory side since we can't really influence it ourselves. The main theme, though, is regulatory clarity, and that's been, I think, what's lacking, is that because of the lack of clarity, some things like trading of tokens went offshore to places like the Bahamas, and we've had some negative consequences from that. So I think any clarity that the agencies in the United States could provide will be helpful. And I had served as chairman of Bitstamp for a long time, and it is difficult to manage a business when there's nothing written down. You have no idea what is a security, what's not a security. So as soon as there's more clarity on that, that will help. And then I think the bigger part is to help institutions get engaged in the space. In 2021 and 2022, a lot of very big institutions were doing a ton of work, going to get engaged. Some did some small investments in the space. And then, we had, Terra Luna and FTX and all these bad things happen. And with the lack of regulatory clarity, it kind of scared off a lot of institutions and they put it on ice. That's my biggest prediction, is that once we do have regulatory clarity, bigger institutions will come back to the space over the next, say, 2 years and really start investing in it in a real way.
I also think the finance sector will go all out for this as well, because they know how much efficiencies within this, whether it's in the payments or whether it's tokenizing equities and all other kind of financial assets for settlement, clearing, everything else. It feels like that is going to be, whether it's this cycle or next cycle, but that's going to be enormous when that happens.
This intriguing interplay between banks, regulatory bodies, and crypto giants like Coinbase heralds a shift that might just become the new normal. In conclusion, whether you're a seasoned investor or a newcomer, aware of Powell's groundbreaking words, the question is, are you ready to be a part of this financial renaissance? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.